Greetings traders, this is Houston Trung from thetradingedge.org, and here is your market watch for May the 31st to June the 4th, 2021. First off, hope you had a good trading week. For the most part, it's a pretty quiet trading week across assets, both on the equity side and the crypto side. Now we are getting into the last trading day of the month, so Monday is of course the US Memorial Holiday, so that will be a day off on the US side. But of course the Canadian stock market as well as cryptos are open on Monday for trading. But the big trading day will be June the 1st because we get a brand new month there, and the price will have to reconfirm the levels, the weekly open and the monthly open and the quarterly open. We're going to want to reference, where price is trading in relation to those three important time frames to see the larger trends. We'll get to the charts in a few moments here, but I'll just quickly talk about what we'll do today. We'll begin with the U.S. equities because that's been steadily grinding higher. That's kind of the bias that's been playing out for the past several months. There's no reason to believe that it won't continue to go higher. We had a brief pullback on equities, and that scared out some folks. But at this point here, there is just no reason to not think that the markets won't grind higher here. Now we could have a bit of a pullback. Things can't keep grinding higher forever, but I expect, again, given just how accommodative the Fed has been and the loose fiscal and monetary policy, there's no reason to believe that buyers will step back up again, because frankly we're in a market where there is nowhere else to go, right? So if you believe in this thesis of there being that the Fed is slowly inflating the US dollar, then ultimately the benefactor of that are soft and hard assets. It's the stock market, things like real estate, commodities, and perhaps digital assets like Bitcoin. So in a world that's kind of scrambling and trying to find yield and returns, there really is no other place to go, and there is no other place to park your money other than the US stock market and, again, I said soft and hard assets. So even if the US dollar goes down, that ultimately will be good for these soft and hard assets. So, that's the big macro picture. In terms of econ calendar, watch on Thursday and Friday. Thursday we got that CPI number, always worth watching. And on Friday we have the NFP, non-farms payroll, always worth watching as well. And then we do have a few earnings names, kind of a slower earnings calendar week this week, but do keep a watch on that because there are some names. As always, make sure you're checking for your earnings risk. Alright, so let's jump into the charts now and let's talk about the price action. We'll begin with our friend the VIX here, as we always do, and then we'll rotate to the crypto side. So the VIX has been slowly decaying, and this is kind of what we've been expecting, although we had a bit of a blip earlier in the month, but for the most part, we spent most of the month red. So outside bar in the month, one trading day left on Monday. Again, the US stock market's not open, so this is going to basically be how it closes. That's an outside bar down. Going into June, so June the 1st, Tuesday, immediately we're going to want to see on what side of this outside bar does price trade. Does it break below May's lows? And if so, that's a Momo down situation, right? And you want to know that because that means this trend continues and we might get an aggressive continuation to the downside. Now, as always, when we look at these outside bars, and in fact any bars, you want to see if you're trading inside the bars or outside the bars, because that's going to tell you if you're trading within a range or outside of a range. So on Tuesday, when the market's open, the US market's open, if we go outside bar down, that way Momo down. If you go outside bar down but pops back in the range again, then we did break that low. But then if you're trading back in the prior month's range, that's obviously a range trade versus there being just straight range expansion. So that's what we're watching for with these scenarios. Is you want to always be looking at the prior bars and where we're trading in relation to those bars. So that's the outside month on the VIX chart, and on the weekly chart, it's played out kind of what we thought it was going to do, and that was to resolve to the downside. So let's expand that a bit. Here we go. Going for the month of May, it's wrapped up now. So what can we say? We had the double outside bar, that small scare that popped above the quarterly open, and we tagged these upper bands here. What are those upper bands? Well, refer back to my video from 2 weeks ago where I talked about the AMR, the average monthly range. Basically, that heuristic is if you hit the upper band, if you cannot crack above it, then more than likely you're going to fall back into the range, because that's an average range for the month. So if you break above, then you're likely to see range expansion. The VIX, as I said already, a couple weeks ago, rarely do you see range expansion on the VIX Really, do you see a break of that AMR? You have to go back significantly. This is again back in March here. We actually got a break above the AMR. Okay, and you have to go back again. So this is it's worth looking at. If you take a look here, when you see a break above the AMRs, then you see range expansion, and then you can see a multi-week move. But for the most part, the VIX, and that's just the nature of fear, is that it's difficult to keep fear elevated for very long. And for the most part, here comes that word. It's transitory, right? It's transient, meaning you hit the upper bands, and if there is no more catalyst, if there's no continuation in terms of the news flow, then that narrative changes very quickly, and people fade that fear. So 2 weeks ago, so not this past week, but 2 weeks prior, we had that small blip up. It broke above the quarterly open, hit that AMR, but quickly faded back in, creating the double outside bar. And then last week was very quiet. We had the inside bar, and this week, it was basically a resolution to the downside. Took out prior week's low, and of course the lows from the weeks before that. So it's going right back on the lows again. I'm not going to say it's all-time lows, because as we know, a few weeks ago the VIX actually did the VXX, that is, did a reverse split. So this thing, basically reverse split, and there's no reason to believe that this thing won't basically continue more to the downside. Take a look at this. Let's change our picture here, because the VXX is a little bit misleading sometimes because of its properties of decay. Just because the way it's structured between the short term and the midterm futures contract. Sometimes because of the way it's structured, there's a natural decay in there that has to happen as it rebalances. So sometimes I'll look at the VX, the short-term VIX futures contract. This is the front month contract, to see a little bit more clear picture on the underlying VIX itself. This tracks the VIX more closely than, let's say, VXX, which is, again, as I mentioned, is a combination of the current month contract and the midterm contract. So on the monthly contract, again, we did have a higher high, but we sank back in again, and you can clearly see now that on the monthly contract we gave up that huge blip that we had, right? That huge pump up that we had back in the month of March of last year. So that was the pandemic fears, and we saw that huge spike, and of course it's very difficult to keep that fear elevated. And so for the past several months, again past year or so, we've been slowly fading it. And now we've come back out the other side, and I think it's very likely now we take out at least Feb's lows, and then maybe even go back to December's lows. So that would get us back. So right now we're trading around the 19 handle. This down here would get us back to the 14 handle, and down here would be the 11, 12 handle. So I think ultimately that's where we're going to go back, because the environment we're living in now is really no different than what things were like back in 2020 before the pandemic started. So there isn't a lot of fear out there, and going back to what we said before, there really is nowhere else for money to go. We have a lot of money sloshing around the world chasing yield, and where else is it going to go? Probably it's going to go back in the stock market, digital assets, and hard and soft assets. And so there's no reason to believe that the VIX, we're not going to get back to the prior regime that we had way back here in 2018 to 2020. Looks like we're heading back there already. So the VX weekly chart did not resolve as strongly as the VXX chart did, but you can see the exact same pattern. Inside, double outside, inside, we break down here, so we expect now for this thing to come out and take out May's lows. All right, so that would be the expectation there around how that plays out. Okay, so there's your VX contract. Let's take a look now at the SPY, because the SPY going very slowly, but it looks like we're probably going to get back those all-time highs, because the SPY now has had 7 consecutive months of higher highs and higher lows. 1, 2, 3, 4, 5, 6, 7. We closed the month as a strong momentum bar to the upside. So we had a bit of weakness earlier in the month, right? It was a red month at one point, but that does not look like a red month anymore. Set up as a strong momentum hammer to the upside there. So no reason to believe that we won't hit all-time highs, although it's very, very grindy price action, and frankly the ranges are very, very tight on the indices. So there's your monthly chart on the SPY, and the weekly chart is just playing out very slowly, right? So we saw this last week, the Momo down reversal long as potential. It did break above this last week's highs this past week, and so yes, we're going back to all-time highs right there. When do we get there? Not exactly sure, because it's very, very slow going right now. You can see how tight it is. If you look at the 2-week chart, it's an inside bar, right? So we still have 6 days left on this 2-week chart. Actually, I think it should close out by now. Yeah, so this should close out on Monday. Although it's not open on Monday, so Tuesday we'll have a brand new bar. But for the most part, we're going to close off there, and we want to see if we can break above that bar's high there the first week of June, and then we'll probably get back to those all-time highs once again on the SPY. So very, very slow going, but for the most part, it's grinding higher. Very, very tight trading action. Look, for the week here, we're up I think 1.25%, but it's just a lot of back and forth. It goes up, backfills, and steadily climbs up again. But for the most part, look, the days themselves are ending red more days than not. So here's your Monday, 1% up, then a red day, then a very small inside day resolves to the upside. But each day, there's more sellers than buyers, even though they're closing higher. They'll gap, they'll move higher, but then they'll sell it back just to go up again the next day. So just grinding higher at this point. The saying goes, you can't fade a dull market. It kind of feels like we're trading the summertime already because it's such a slow market. We got Memorial Day obviously on Monday, so maybe that's why people are taking the foot off the pedal. So let's see how things kick off on June to see if some fresh money or inflows come in equities. But it's really it's hard to fade this market right now. We do want to see how it opens again, like I said, on Tuesday, because we're going to have those brand new time frames. Here is our quarterly open, likely not to change. Right, that's probably going to be green quarter. Unless something really drastic happens in the next couple months, it'd be hard to test that level. We're pretty far away right now, but that'd be pretty far off to test. So here, wherever we open on Tuesday, that's when you want to watch and see where does price transact versus that weekly open and monthly open, because that will give us direction on the larger time frames. Okay, let's go to Qs. Qs did a bit of a reversal on the monthly chart, so we did break below last month's lows, but that did not hold very long. And then look, we close it basically as a hammer. All right, still red on the month, down 1.2%, but definitely fixed that damage that we saw early in the month. So that that quarterly open held. We tested it, came back above it, or traded below, then came back above, and so now we're holding. And look, we just every month here, when we do get a break below, the buyers step back in again, like we'd had back here in March. We broke below, they step up, they fix the chart. Same thing here, broke below last month's range, step up again, and so yes, I continue to expect this thing to continue to play to the upside here. So long as the bonds have been very accommodative, right? So the bonds have been helping these charts, have been helping the equity side here. They've had some good strength. We'll talk more about that in a few moments here, but that's really the correlation that I'm watching very carefully is how far do bonds go from here. So on the 2-week chart on the Qs, we have that Momo down reversal, and that's working to the upside now. There's your monthly open that will change on Tuesday. So once again, we're going to watch and see where does price trade in relation to that. But right now, we're already playing out this pattern. So expect that high to get taken out, that all-time high. The weekly chart looks like so. It's also an inside bar up. So again, here's a monthly open. It was going to close red because it's very unlikely that was going to break above that monthly open this week. So now maybe with the brand new month, we'll have full time frame alignment once again, right? So if we open up wherever we open up around here on Tuesday, you're going to have a green quarter. And then if you trade above the weekly and monthly open, you're going to have full time frame alignment to the upside, and there's no reason to try to be fading that. You're going to be looking to get back to those all-time highs very, very quickly. Let's go down now. Dow, okay. Dow chart, man, look at the strength of that. I think that's 7 consecutive, higher highs and higher lows. 1, 2, 3, 4, 5, 6, 7. So there you go. Dow hit some all-time highs earlier in the month. They pull back a bit, but still a decent, close to 2% return for the month of March. Nothing nothing to sneeze at there. So here's the pattern, just like just like we saw in the SPY. We're doing the Momo down reversal long. Momo down, right? Broke above prior week's high, and so now we're grinding back higher again. Do we continue to grind higher? And we have full time from alignment here, right? So yes, definitely expect that high to get taken out. You see that again? There's your blue line, your blue upper band. That's your average monthly range. We tagged it earlier in the month. We faded back in again. The monthly open holds. So for the most part, it's a range trading. We're trading within the usual expected range here. So at this point, expect, unless some big news comes out, expect this thing to continue to grind higher, take out the all-time highs. Okay, so here we do have a bit of a choppy week, and we did fade in a bit, but here outside bar, inside bar, and double bars to the upside, although they close red both days. So yes, they're positive, but they close red because they're obviously closing lower when they opened, but they are gaps up. So they're for the most part they're still green day. They're still gains on the day, but it's very tight trading. Look how tight that stuff is there. Sometimes you're watching these indices on intraday and it doesn't look like they're even moving. That's how quiet it is, and again, maybe just because people want to take some time off for the Memorial Day weekend. So there's your Dow chart. Russell finally picking up some steam here. So people are actually taking a little more risk now as they're getting back into some of these higher beta names, these small cap names. Look, they fixed that chart, right? It went inside bar down, so that's actually was a inside bar down with full time from alignment to the downside. We did explain it a few weeks ago that they quickly fixed that chart by popping it right back on the range. So one part here, we were below last month's range, we were down here, but they quickly jammed it right back in the prior month's range. This is why I'm always saying that you want to see are you in what relation are you trading in relation to the prior bar? So is it range expansion, or are you going back into the range again? And this is an example where you went quickly back on the range, and then they repair the chart by coming back up here again. You close the month as basically as a momentum hammer. So a break above this past month's high is an inside bar down, reversal of the upside, then you're going to take out that all-time high once again. So looking very strong right now for Russell. Hard to fade that guy. Because right now, look at that, inside week and up on the Russell. All right, and what do you hit? That monthly open. So this is why we watch the levels, right? It pretty much tagged it right to the T. See that high of the week? It tagged that weekly open, that monthly open. Could not break above. That's resistance. Comes back in, but still, that's not a big deal because look, you had tagged the the AMRs, the average monthly range to the downside. Could not break below that. That's not going to be range expansion, right? So you fall back on the range again, and so you expect it to be somewhere in here for the rest of the month, and that's what happened. But very tight stuff, right? So even with the these patterns playing out, the outside, inside, and up, you get one day of continuation. So that's a good move on Thursday, 1% up. Here on Friday, you hit that monthly open, right at the open, close to the beginning of the day, and they faded it. Right, so there's your AMR, there's a monthly this is the average weekly range. There's your monthly open. You hit those two areas, you cannot break above. It's not a very strong directional market right now. It's just a grind higher, and here's actually a bit of a reversal. So would not be too unexpected to see Russell maybe have a bit of weakness here and pull back in, maybe fill this gap, but you still got this green. It's a green quarter. So where's our quarterly open? Right there, that blue line is your green quarter. So as long as you can stay above there, you got full time from alignment with the upside if you're trading above the monthly and weekly open. So that's what you definitely want to watch here is, if you open high and you fall back in again, that's going to be more chop, right? So let's say you open up here and you fall back in, then that's always a condition I'm always explaining is that's opening high and then giving it up. So that would be natural sellers coming in, because if all of a sudden you open up here, the monthly open, weekly opens right there. You fall back down into the range, it's going to be red week, red month. You get a green quarter, so you're looking like this. It's going to do that even more than what we saw over the past few weeks. Okay, so right now there's the move on Russell. Not a lot to see there. It's just slowly playing itself out to the upside. Hard to be short that thing for any long period of time. Let's talk about TSX, because this thing is still moving directionally. Although this one here, the Canadian stock market, I think now is beginning to look. I'm a little wary of this chart. So this has been exceptionally strong. As we know, the commodity cycle has played out very, very strongly. Oil's had a really good run. Gold has had a pretty good run. Surprisingly, again, I've been surprised by the strength of gold. But obviously the US dollar weakness has helped that. But yeah, we're seeing the TSX now hit all-time highs, right? So that's all-time highs in the TSX, but now we're doing the Bollinger Band walk. So this is when you have to watch out, because now if you're putting new fresh money to work at these levels, a little risky. Okay, if you're putting all your stack and you're buying up here, I'm not saying you can go higher, but you definitely have to know that you're not the first buyer at this point. As I often say, you're at the tip of the spear, right? And when you're a soldier and you're in the front line of that battle, it does not take much when you're charging into battle and you're the tip of the spear. If that wave fails, it would not take much to see the buyers have to retreat a bit. Okay, so that's what could happen here is that if this momentum, this continuation move doesn't doesn't progress, it doesn't resume or continue on, then you can definitely expect a pullback here, because this is getting very extended now, and I'd be very watchful and wary of creating new positions at these levels. This is a dangerous place to be, because you can clearly see, right, that's extended. Doesn't mean you can't go higher, but this is when you'll have to be very mindful here, because as we've seen in the crypto charts and even the equity side, when you see that kind of stuff, you have to watch out, because this is where they lure in more retail folks, because they the media keeps telling that there's all-time highs and that the market's looking great. This is actually the risks of, this is like the riskiest in terms of trade location that you can get into if you start entering the new positions here. Okay, on the weekly chart, same thing. We're not at the Bollinger Band highs yet, but look, we got the Momo move now. So now we know it's poor market structure. Momo up, up, up. So 3 weeks of consecutive higher highs, higher lows. You do have range expansion, so that's done for the month. You have range expansion now. We have a new month coming, but this now is if you break below this past week's low right there, that's going to be a extinguishing of that Momo up move. So then we can definitely expect it to fall back on the range again, and that level right there, the yellow line, is your prior month's low. So if we break below here, I can very quickly see that we can break back below here through this range again, and then we take out all those late buyers. All right, so TSX, so if you think that through, what does that mean? Well, TSX is overweight in commodity names, right? So commodity names and oil names. So I'm watching very carefully now to see these oil names, these commodity names, and that whole reflation trade, whether or not that's beginning to unwind a bit, because we're seeing more strength now pick up in these small cap names, like I said, the Russell as well as the Qs. So you saw a very strong week this past I think past 2 weeks now in the ARK ETF, and I'm still long that, and a bunch of small cap. As you saw at the end of this past week, we saw all the degen names like the GameStops, the AMCs, the Bond, the BBs, so the BlackBerries, all these degen names were flying once again. So I think a lot of people got short those innovation names, and they're doing the squeeze again, right? So if you thought the squeeze is over, it isn't. They just basically just dusted off that playbook once everyone got short again, and they're playing that out again. So the commodities trade, the reflation trade, people going into these oil names that are related to the reopening, I think that may be getting a bit long on the tooth. So watching to see now how oil responds, because that thing's getting a bit choppy. As well as look at this one. So here's so Homebuilders have been on fire, right? So look at something like Toll Brothers. So we know how strong Homebuilders have been. Let's go to Toll Brothers now. Look at that move on Toll, right? This is the monthly chart. That's a Momo move to the upside going into the Bollinger Bands. So that's weak structure, right? So if this low gets taken out, right, okay, right there, May's lows, watch out, we're coming back in the range again. And so that's that would be very indicative of that play, right? Where if you see this past month's lows get taken out, watch out. Alright, it's losing a bit of steam. You already had that big high. It did the Bollinger Band walk shortly here and then fell back in. If you cannot make fresh highs here and comes back in, then yes, I think that trade is over, and we may be seeing rotation back out of those reflation names back into a growth once again. And who knows how long that plays out for, right? So that's going to be the thing, is like how long that plays out for. We're going to watch the bonds. We're going to look at the bonds very carefully. Look at the EM as well, right? So these names taking a bit of a break, emerging markets. But now they're pick up steam again. So the reflation trade this narrative is slowly changing again. I think a lot of reflation has been priced into the markets already. The markets being a forward-looking mechanism. Now the question is, what is the market trying to discount next? And so I think it's that rotation back into these growth names. And you're seeing the emerging markets. Look how strong that ended. Had a really weak beginning of the month. Went reversal to the downside. Look at that brown information upper trend line. We drew that in a long time ago. I haven't adjusted that trend line in months, right? Maybe even years. So you know how long that's been on the charts, and you can see we're basically consolidating right off that upper trend line. So it's held now, and we're back above that quarterly open again. So depending where we open on Tuesday, let's go back over here. The weekly chart, it's been lots of consolidation. So this is a lot of pent-up energy. Right, and if we get some positive news coming out of Asia, inside bar up, maybe it's maybe it's due to the reopening or whatever that narrative is. Who knows, right? Sometimes the charts, the charts are ahead of the news flow, and that's oftentimes the case, as I've remarked before. So now, does the narrative play out? Does the news flow come out that aligns with the charts? And if it does, yeah, we got a brand new story here. Maybe we're going to start seeing some bigger moves here in emerging markets. But this past week, not a bad week for emerging markets. Look, up 3%, 3.25% to roughly, right? So inside bar up. And there's your all-time highs. Okay, so there's your EEM, and the 2-week chart makes it even more elucidative here. Momo bar and down. So sorry, outside bar down. So Momo down, reversal. We're going after April's highs, and then we're going after that high there, right? All-time highs. So I think that's still looking quite strong for that to play out, so long as that low stays, right? We got that low of May. It held. And so now we take out that high. Yeah, there's no reason to believe we can't take out these all-time highs. Now, let's talk about bonds. So the bonds, what's it telling us? Well, if we begin on the 3-month chart, as I've been saying for the last while now, we had that scare, right? Last quarter. And this quarter, we still have a lot of quarter left. We still have 32 days left in the quarter. So, a little more than a month. And I think it's going to stay inside bar. What's the chances of this not staying inside bar? I think bonds are actually going to head higher here, but I don't think it's going to be able to break above last quarter's highs. This is too much range. So I think it's just trading slowly, grinding higher, like we're seeing in equities, and that's again positively correlated. When we see TLT have a good day, both the short bond, so the 10-year bond, or the, let's say, IEF, which is a shorter bond duration, as well as the 3-month, the 25, 30-year bond, which is in the TLT basket. We see that we see equity prices also rally, or at least act strong. So I think it's going to end inside month, but I think we can probably stay green on the quarter. On the monthly chart, yeah, we had a slight I wouldn't call it a scare. It was a quick breakdown to the downside. The buyers quickly stepped up again, and now we have a potential inside bar reversal to the upside on TLT. Right, we break above May's highs. Yeah, we're going higher. We're heading higher. So there's your monthly chart. Look at the weekly chart. Very tight stuff. So this is the 2-week chart. Okay, so look, that quarterly open, that blue line got tested briefly, and they popped it back up again. Here, inside bar down, they broke above that 2-week high, and now they're slowly going for that April high there. Actually, it's not quite the high, but that's the high, but they're going after that bar, and then perhaps April's highs. On the weekly chart, it looks like this. Very tight stuff. For the week, it was up 0.56%, so kind of like watching paint dry, but it has been slowly grinding higher. Okay, so inside bar up, we know there's a 2-week Momo down reversal playing out, and that's the pivot they're going after. Okay, but they're having a hard time, because I said last week already, you're gonna have mixed time frames, right? So look, there's your monthly open, that orange line. That's why we watch it. This is just it's so important to watch these levels. You get your monthly open and your quarterly open. Can you see what's happening here? It's just basically playing ping pong, right? You tag that level, it comes back in, it comes back down again. So it's very, very tight trading. If you look on the daily chart, you can see how that is, right? It's just, you had a couple days there where you were able to close above, but not before hitting that AWR, average weekly high, falls back on the range again, stays below the monthly open, so it just closes the month out like that. But again, the buyers are stepping up more times than not. This here was a Momo up move. Remember I said this? This is the issue. You had a Momo up move for 1, 2, 3, 4, 5 sessions. So we were getting higher highs and higher lows. But as soon as you break below there, that is a extinguishing of that Momo up move. When did it get extinguished? This bar. This is actually a gap reversal, right? So this is actually a gap reversal, or Google Red Dog reversal or gap reversal. That'll explain that price pattern, and that means you basically open up above the prior day's high. That means you actually gap up above the prior day's high. The buyers get everything they want, but they can't hold it up there, so they fade. So it gets faded, and the next day it actually gaps lower. They fixed it right away. Look, because it bounces off the weekly open. Look at that purple line. That's the weekly open. To the T, pretty much to the T. Buyer stepped up, and on Friday, a bit of weakness there, as they do not want to close it above the monthly open. So gives you a shooting star, and I wouldn't be surprised to see bonds fall in a bit here, but I think it's still still trying to grind higher, as we know. On a very low time frame, it might pull back a bit, but on the higher time frames, I think, as you said already, on that weekly and 2-week chart, we know the direction. It's trying to take out. We know the pivot. We know they're trying to take out that one, 140.60. That's the pivot they're going after. Once things get more aligned with the new month, if you're trading above the weekly open, the monthly open, and the quarterly open, yeah, you got to be biased to the upside, and they're definitely gunning for that pivot there if it has that full time frame alignment. Okay, so the US 10 years, one that I've been saying to keep an eye on. It's quite elucidative here because the US 10 year, again, the bonds in general have been very, have been a good canary in the coal mine. Where they go, equities go, and obviously where the US 10 year goals go, or where the bond yields go, that's where gold's going to go. And obviously the 10 year note has a big impact on the US dollars. Wherever the US dollar goes, that's where gold's going to go, right? And where gold goes and where the dollar goes, that's where commodities are going to go. So that's why they all trade in correlation in that manner. So the US 10 year, we saw a bit of weakness. They tried to step up here, and I still think that on the 3-month chart, it's just an inside quarter, right? Just like the 10 TLT, it's inside quarter. I think it's going to remain inside quarter on the 10 year. I just don't see it breaking out of this range. So we got another month of this type of action here, just very tight stuff at the very least on the 10 year. So it's going to end likely. It's still got 30 days to go, but I'm telling you, it's probably going to end as an inside quarter, more likely than not. Then a monthly, we did have that break to the downside, but they stepped up a bit. But we have the quarterly open to the upside here, and they can't break above that. I just don't think it's going to happen. So more like we fade a bit. It means we have a fading interest rate, and that should be weak for the dollar. So that probably would be conducive for further gold strength. We'll talk about that in a few moments here. So right now, just the price action alone is telling you inside bar down. We can see some more continuation here because the weekly chart also went inside bar down. So we have full time frame alignment now, right? Weekly open, quarterly open, and monthly open, and it's trading to the downside here, just very, very slowly. It lost 0.252% on the 10 year there for the week, and so this brings us to the dollar index. So DXY, look at this one. So DXY showing us let's talk about the weekly. Yeah, outside bar. Okay, so the outside bar on the DXY. This will be interesting to watch. What side of price does the DXY trade on? Coming into the month of June, we break below this past week's lows. If so, it's a Momo down the DXY. That means the dollar's getting weaker and weaker against that basket of currencies that's inside the DXY, predominantly the euro. So this is what we're going to see. If we go outside bar down, that's going to be a Momo move down on the DXY, and then we could definitely expect to have at that point stronger gold prices. So on the daily chart here, we close out that week with a big kind of a shooting star on the daily chart. All right, so it hits the this is a 20 period moving average. That's the 8. There's your weekly open. So slightly green week because you're trading above the purple line. So you're slightly green on the week, but you can see that it is a shooting star. So on Monday, if you break below Friday's lows, yeah, that's going to be a bit of a reversal move. We expect more dollar weakness here. If that happens, if we break below Friday's lows, we can definitely see more weakness coming back to this range again. And then again, with that'll be conducive for those for gold prices and commodity prices more than likely. Okay, so if we come back in the range, right? So this is the point. We come back through this range. We take out that purple line. That's an outside bar down for DXY. Momo down on DXY. That would be that's what's telling you. However, if they surprise someone, now this is going to be the big however, because you got to think about both sides of the picture here. If you actually break above Friday's highs, because this bar looks somewhat bearish just because of the long wick. If somehow, this is supposed to show that there's a lot of sellers. If somehow this week we break above Friday's highs, that would be unexpected, okay? And that's something you want to watch for, because that's oftentimes the best money's made when you fade the consensus. And if you break above there, that's not expected, and you want to know that, right? So you break above that 94.41 level. That means dollars are going higher. The DXY is going higher, and that would not be good for gold prices and commodity prices. So that would be definitely the opposite side of the trade. So that's the level I'm watching very carefully there, because that would be, again, you break above that high on the weekly chart. That's Momo up. Right, that's going to be Momo up on the DXY. Now you're still going to have a red quarter, but that would be a green week, a green month if you go Momo up. And so then you might go back this range and then take out that pivot there. Okay, so that's something I'm watching very carefully, because that would be the unexpected thing to happen, and that would not be good for, again, commodity prices, gold prices. I'm hammering at home lots, but I think that's a very, very clear understanding there. Okay, so let's talk gold, as I've been beating around the bush around that. And gold I've been surprised by, right? So gold I've been very surprised by, given how strong it's been. I pretty much, I still think it's going to remain inside quarter. So I thought we were going to remain inside quarter, but we're getting close to taking out that prior high there, that prior quarter's high. I still don't think we get there. That could be wrong, and I'm actually long gold right now, so I don't mind if it takes out that high. I'd just be very surprised. So when I say I'm very surprised, that means that's something that I think is unexpected. Doesn't mean that I'm caught necessarily offside. It just means that that would be unusual for that to happen, just given how wide the ranges are. So that's something it's a least likely scenario. So when I say that, it means that I'm thinking of things in probabilities from likely to moderate likely to least likely, and I think taking out that is least likely. I think more likely is for it to stay inside quarter. So for this may fade back in again. But let's take a look at the lower time frame. So on the monthly chart, okay, we've had a couple really good months. So look, we had a good 3% move in April, another 7.78% move in the month of May. So you're up close to, up to over 10% now. Now, is that getting extended is that gone too far too fast? On the weekly chart, I think it has. This is why, this is the, you put together all the pieces. This is when you have to watch out. Like DXY could get strong, right? So you might see the dollar index get strong, and that would mean gold get weak, because now gold has had a multi-week move to the upside, and now we're in the Bollinger Bands. Buying at this level here is risky, right? So this is when we start talking about trade location. The risk to reward symmetry there is no longer great. You buy here, you're at the tip of the spear. Literally, you're at the tip of the spear. You have to believe that it's going to go higher. Like, it has to keep going. Otherwise, if you break below this past week's low, you're coming back in aggressively, because you have a lot of folks here, who are going to be weak hands. If you break below that low, they're coming back in to stop out those weak hands. See, there's the AMR. Once you break above that AMR, you can expect range expansion. Okay, that's what we got. We got a 2% move here and a 1.5% move there. So 3.5% move when you see that range expansion. So not bad once you understand that. So now that's what I'm watching. Has gold gone too far too fast? So if you break below this past week's low, yeah, you're fading back in. That's when you have to watch out, because look at the daily chart. I think it's actually pretty ugly. This here is distribution, in my opinion. Okay, so you're having a bunch of outside bars, and people who are buying now, they're having a hard time getting good trade location, because you're getting a bunch of outside bars. People are buying here, and they're getting stopped out if they put the stops too close. Let's say you buy above this bar's high here, you break below the prior day's low, you might get stopped out, or you don't. Right? You try it again up here. You try to buy a breakout, okay, it breaks above this bar's high, then it fades back in again before it turns green again. So you do have bars stepping up, but that's not before they actually fade. The guys are playing breakouts, right? So it's getting tricky here, getting a little dicey, and this is a lot of poor market structure. So we'll not take much now to break below. Again, you break below this Friday's low, that low right there, you're going after that pivot there, and that will create the break of that weekly uptrend. So gold here, I think I'm a little wary. I did take some profits this past week. I think around this, I think Thursday here. But I'm still low. I'm still long from lower. Not the daily chart, the weekly chart. From down in here, this area here, 1735. So I had a really good move there so far. But now, I don't mind. I still think perhaps gold can go higher, but just not in the short term and intermediate term. So I would not be surprised to see a bit of a pullback here, because I'd be wary at this point of the price action. And again, this would really fall in line with what we talked about with the Canadian stock market as well, right? We saw the TSX hitting those Bollinger Band highs on the monthly chart, and yeah, that perhaps has run too far too fast. Wouldn't be surprising to see some profit takers step in there and then see a bit of a pullback in some of these trades. Okay, let's talk about BTC now. We'll move ourselves over to the digital asset space and talk about digital gold. So let's talk BTC USD. And for the most part, it's staying, like we said it would, inside the range. So what do we say so far about BTC? Well, big picture. Okay, so here's the big picture. So let's just say that the month of May is nearly done here. We still have, of course, until Sunday night. But there's your ranges for the month of May. Big range. High of 64,829, low of 29,563. So that's a pretty big bar. And I'd be very concerned if you take out last quarter's lows. So that 28,540 area, I'd be very concerned about that, because you break below that low, you're definitely going to see more seller step in there, because then that's going to be, I think it's going to shake out some folks. Okay, so definitely going to shake out some folks, because you usually don't break below quarterly lows without there being some continuation. So definitely need to watch out for that. So at 28,540 area, you definitely need to watch out for that level. On the monthly chart, big reversal bar this past month. Okay, so we'll redraw our levels right now. We'll put our monthly highs and lows right there. And if somehow Bitcoin pops up here going into June, the issue here is that this is a huge range. We mentioned how big that range was already, right? Now, more than likely, you're going to stay inside month. If you pop up in here, it's going to be inside month, and you may see nothing happen in Bitcoin that's substantial for at least another month if you get trapped inside of this range. So playing the probabilities, if you break lower here, then the downside's worth playing. If you somehow get stuck in here, man, it's going to be no man's land, potentially for a while, because you have a quarter right there. The quarterly opens up there, and let's say you pop up, you get a green week and a green month, you still got a red quarter. So you're still going to see shorts out there, trying to take some short attempts at it. So you're not going to have full time from alignment to your backside here. So it could be very choppy trading. And for the most part, this could be one, the situation where I call it no man's land. We don't do a heck of a lot until you see this next month close out, and that could be, especially if you're in here, inside month. Then once you get that month of June done, and then if you have an inside month, then July gets interesting, right? Because then you have a brand new quarter. Then you're gonna have full time from alignment possibly on that brand new quarter, and that gets interesting. But right now, if you open up here, and you trade up, you can run a bit, because this is a huge bar, and it's still worth trading, especially if you can go lower time frames, because the range is so wide. But for the easy swings, it's tough right now. It's just tough because you're trading against the bigger trends, and it's hard to trade that. You're better off if you're going to take swings. You shorten your expectations around both in time frame and in price. So there's your reversal on the monthly chart, weekly chart. Unless something happens with a day and a half of trading left, I really think we still remain inside week. I just think we stay inside week here. With a day and a half left, I don't think we're going to take out last week's lows. Even if we close here, so here now, this is getting iffy for the longs. I will take this short. If we break below, this bar's not finished closing yet. I'm just using it as an example. If we break below, let's pretend it stays inside week, and opens up like this on Sunday night. If we break below this level here, wherever this one closes, and it's still inside week, they're going after that pivot right away. They're going after that 29,563, and you're getting very close to taking out that 28,540 area. You definitely want to be short. At this point here, the bias is to the short side. So I'm just saying, for buyers, it's a tough slog here, because you have full time from alignment with the downside. Red quarter, or red month, and it's a red week, correct? And it's still Momo down. Momo down, inside bar. Now, if buyers will step up this next week, the new week and the new month coming, you break above that high, that extinguishes the Momo to the upside. Problem is that you're going to be capped to the upside there at that quarterly open, and then you might get stuck in this range. Now, again, there's still big swings here, so I'm not saying don't trade it at all. But again, reduce your expectations around what's possible. You're not going to see a directional move anymore, because it's not like it was at the beginning of the year when you had full time from alignment. It's way different, right? So when you have these crosswinds, the moves are never this directionally strong, right? So when you only see moves like this when there's full time from alignment. Notice how it's full time from alignment, right? Green quarter, green month, full upside. You can just look at the moving averages, clearly spread apart, expanding. That does not look like that anymore, does it? No, the charts have been very, very damaged. So now you got to wait for this thing to get repaired if you want to have those. If you want to sit on an easy trade. Right now, I think the bias is more to the downside if you can take out this past week's lows. That's how I'll be trading it. Okay, so that's your Bitcoin chart. ETH, not much difference. Let's talk about Ethereum here now. I think Ethereum is still out of the bunch in a pretty good position here, because it's further away from taking out the quarterly low. So you got to go all the way down to just this bar is so wide. You got to take out 714.89 on the quarterly chart to break this quarterly uptrend. That's ridiculous, right? Because you're not going to get a lower low until that happens. I don't think that's going to happen unless something incredible happens. And and who knows, with cryptos, it's anything's possible, but that would be very unusual, and I would give that a very low probability assignment there of that outcome. So I still think that the quarterly chart is still green on this thing. So the upside, I'm still a little more biased to the upside on ETH. And now if you look at the monthly, you get the outside bar. So that's at a wide range. So here, let's redraw our ranges, even though the month's not quite done yet, but it's close enough. I'll redraw it for this coming for this video for this coming week. Issue here is you have a huge outside bar. Okay, so what do we know about the outside bars? We had the big range expansion. Now we're right in the middle of it. Let's pretend on Monday or Sunday night we open up right here. Okay, where we're trading right now. Inside bar, right? So it's gonna be very difficult to break outside of this bar in June. Extremely difficult, especially if you're in here somewhere. More than likely, if we remain in the middle range, they'll stay outside inside. Then that sets up something interesting to begin the next quarter, right? Then we maybe get continuation, but June could be very frustrating if you're trying to trade directionally and you're wondering why you're getting some chopped up. It's because you're inside this range and it's not clear range expansion anymore. You're trading inside of a range. Okay, weekly chart, same thing. Inside week. Okay, there you go. Redraw that. I don't think that breaks. I don't think you're going to take out 1755 before the end of the week. So I'm just going to put that low levels there. This coming week here, you got to watch out for it though. See here, there's your quarterly open. See the bars step up right there. And remember last week when I said, okay, I was surprised that we didn't take out the 1926 level. Because on every other exchange, well, most exchanges that I looked at, FTX and Binance and so forth, they had taken out April's lows. And finally, on the Bitfinex chart, they finally did it. So I actually got short on the daily chart here. I got short in this sequence. Yeah, right in here. Very, very quick trade. It's a very simple trade because we were expecting the 1926 area to get taken out. That's around here. 1926 is down. Here is it right around here. Right on there. There's your quarterly open. So 1926 is right around here. You short that, and I covered as soon as it came back in here again. Covered it. So I think I made some easy, some easy change, or not a huge trade, but it was a very easy change because that was the pivot to go after. We got a little further down. There's your actual 200-day moving average. Look, it holds. There's your quarterly open. They cannot stay below there. So right now the buyers are stepping up to defending those important levels down here. But you can see it's a slow fade, fading back in again. But let's see where it resolves this coming week. Right. So as we know already, we have a huge range for the monthly chart. So if it goes inside bar up, that would be interesting. Because you're gonna have a brand new week and month, or you're sitting here again somehow. That's a big range as well. Again, anything could happen in the crypto space. You can get buyers all of a sudden step up here. But yeah, I would not be surprised to see this thing should create another inside week. That could be also possible to frustrate a bunch of people because people like volatility. But what often happens after sell-off is that the volatility actually compresses, and the folks who are volatility chasers, they actually get chopped up as they were expecting the moves to continue. But in fact, what's actually happening is that the volatility is actually compressing, dampening, because the fear is running out of the markets, and then they get chopped up as they keep looking for the downside move to happen or the upside move to happen, when in fact what's actually happening is consolidation and dampening of fear. So right now, yeah, let's see what side of that range it breaks. That's a huge range though. That's a close to 900 point range, 800 point range. So yeah, it's gonna be tough to break that. Let's see how that breaks. So, but it's very clear, right? The levels are very, very clear. It's just the bars are very wide, so it's very likely that we can just do this. Let's quickly break below there. Then we're going after that pivot. If we break below there, yeah, give it a shot. But if that quarterly open holds, you gotta watch out. On daily chart, again, that there's your quarterly pivot right there, and there's 200-day. And those things are holding so far. That 200-day is actually quite interesting. If you take a look at, look at this. So this monthly open came into play. See that monthly open, that orange line? They tried to break above it. They had one day where it closed it there. But the next day they faded right away, came back in the range. So they could not hold it above the monthly open. So these ranges are those levels are coming into play. That's why this week's interesting, right? We've got the monthly open there. Sorry, the quarterly open right there. Wherever we open on Sunday night, you're gonna have a weekly and monthly open here. So for Ethereum, this could be fairly bullish because if somehow you trade higher, that'll be full time from alignment once again. Full time from alignment. Okay, so somehow, let's say on Sunday night you open here, you go up. Yeah, that's full time from alignment to the upside. So that's a possibility there that Ethereum can trade higher. Again, so we're waiting for one of those scenarios to play out. But going back to that 200-day moving average, that observation there, look at these indices here. So here, total, that's the crypto total market cap, right? We showed this last week. The overall crypto space at one point was trading at $2.577 trillion. We got as low as 1.20 trillion, and now look, we're back to that 200-day moving average again, right there. Right, so that 200-day keeps coming into play. There's a question: does it break through there, or does it keep bouncing off that level? So watching that carefully, that total market cap. But here on the total index, outside month. Okay, so there's your outside month on total. The week, same thing. You got a Momo down situation. Momo down, but you're creating the inside week right now. On what side does that thing break? Okay, so watching that carefully. And here on the total chart, let's see. Yeah, the 200-day came into play, and that's just like the last the last chart I'll show here. Actually, maybe I'll show one more after this one. Is the shit perp chart? So the shitcoin index, 200-day moving average right there as well. Okay, so they're all bouncing off this critical level here now, and I think a lot of traders are watching allow this as a bias. We break below there, that's going to bias a lot of traders, and they're going to want to be either long or short based upon where price is in relation to that 200-day. For us, it's simple, right? Well, simple is it will be explained in a few moments here, but right now it's red month, red quarter, and we had a green week. This is why it's choppy, right? But if you break below, like it's on Sunday night, we have a new week and a new month. You trade below that, that's full time frame alignment to the downside, and you want to be biased to the downside at that point on shit perp. That's why I'm looking at a potential short on Dogecoin. If things break down, I think Doge is going to break down, so I'll be looking to short some Doge here, because I think that's going to be hard. Because these, I think Doge, we'll see how if they have diamond hands or not. But you have a big shooting star now for the month of May, and on the weekly time frame right there, we have the reversal on the weekly chart back here, and now we have an inside week. So you break below this past week's low, and I think we have potential for more continuation of the downside because the quarterly opens way down here. So we have a lot of range to do from here to there. So I think that's potentially something that I'm looking at here. Even though 200 days right there, you have to watch out for that one. But at the very least, I think that again, depending on how things trade in relation to the weekly and monthly opens, I think that's going to be worthy of consideration in terms of a short, just based upon the fundamentals of that story there. If we see weakening Bitcoin prices and Ethereum prices, no reason to believe why Doge won't break down as well. And in fact, I think Doge is going to give you even more. It'll be a higher beta name, so I think that'll be very interesting to take as a short. All right, so that's a wrap. We went long again today. Lots of stuff to cover, even though it wasn't a lot of movement. It is the end of the month, so we have a brand new month coming up. Very important, as I said throughout the video, to watch where we transact in relation to those important levels to keep you on the right side of price. Hope you enjoy these videos. As always, looking for feedback. If you guys are enjoying them, or if you want me to change anything, or want me to talk about anything, please share your comments either on the blog, thetradingedge.org, or on YouTube through the comments section. Regardless, click on the like button, smash it at least one time, and make sure that I'm getting some feedback from you guys. And as always, have a great trading week. Stay on the right side of price, and trade well. Talk to you again next week.